Hello traders and welcome to another video review. Today is Friday, 21st of the May 2021. Let's take a look at the Forex calendar. Some data had been published already overnight. One of them is PMI manufacturing data from Australia. As you can see, they were better than expected. But the key event was the national CPI from Japan. As you can see, it was way worse than expected, minus 0.4% versus minus 0.2. Some other data from Japan are PMI manufacturing worse than expected, 52.5 versus 53. Tertiary industry index again worse than expected, 45.7 versus 48, and the PMI composite way worse than expected, below 50 points, which is apparently decline into the negative territory, 48.1 versus 51. This is very bad for Japanese data. Some other data from Australia were retail sales better than expected, 1.1%, and the credit card spending. During the London session, we got plenty of data from across the Europe in form of a PMI manufacturing, PMI services, composite PMI from France, Germany, and of course from the Eurozone. We got data from United Kingdom, retail sales with and without auto fuel. Those are scheduled for release at 7 o'clock. Of course, PMI manufacturing and services, the composite PMI data are scheduled for release from the UK as well. And that's about the London session. During the New York session, we have data from the US, ISM manufacturing, and of course services PMI, composite PMI data as well. Retail sales from Canada scheduled for release 1:30, and that's about it. We are end the day with the consumer confidence data from the Eurozone scheduled for release at 3 p.m. and 6 p.m. Backage huge US recount for all of you crude oil traders. So pretty much busy day, but not that many key important data to be released. Nevertheless, I think we should take a look first on the US dollar and Japanese yen pair, because what do we have here? I guess we are still building the corrective wave here. So as long as we are staying above this line, let me just put it on the graph. There you go. As long as we are staying above this line here, this blue line, we are still possibly making a triangle. However, recently we got a breakout, and today we are already around the level of 108.73, so we might be going lower towards 108.41, which means that the wave D of the triangle, A, B, C, D, we need E as well. And then of course we might break to the downside, so please keep an eye on 108.41 for the wave D, then the bounce for the wave E, and then of course continuation of a move down, because we got ABC to the downside made here. So right now this is our main direction for the US dollar to Japanese yen. 5 waves to the upside had been done. Okay, now we are still in a corrective cycle. It might take some time. To build this corrective cycle. So far we retraced 38% with a low on the level of 107.49, but we are still developing the corrective cycle on the US dollar to Japanese yen. On the Euro to Japanese yen, please notice we have plenty of data from the Eurozone today. On the Euro to the Japanese yen, we have hit our target, 133.13. Target hit scenario was apparently very, very good. New high was made at 133.41, 30 pips above our target. So since then, of course, the market had been trying to break clearly above this level and close the daily candle above this level, but so far didn't happen. The momentum is very strong, is very positive around the level of 70, which means that this market conditions, as you know, we call extremely overbought, but because we are in the trend is up, this RSI might linger here a little bit longer, so please take this into the account. How does it look like from the bigger perspective? We are still above the long-term trend line. We are still trending inside of this channel. Let me just find some other targets, if there are any. Do we have any other targets? Yes. Do we have any other targets? Right now, the highs from the 2018 have been hit. The other highs are from 2018 from the April, and this is around the level of 130. It's not that much, 133.53. So that's a marginal high, a marginal new high apparently. And the next big level for the euro to the Japanese yen is 137, around here, 137.55 or something, yeah, 37.21, 37 and yeah, 55, something like this. Very close to this level. Let me just take a look. 37.51 to be to the point. We have 55. Okay, that's fine. So please notice the uptrend is being continued. No sign of an uptrend reversal yet. Well, we might consider this as a very interesting doji candlestick, but please notice that we need to go more than, I think, 2%, 1.80, more than 2% in order to, yeah, at least 1.80. The correction must be bigger than this to start a deeper decline and overbalance trades. So for now, next support 132.34 and 130.93. Those are the declines. This was our target, and of course this will be there will be our other level here, technical resistance. Right now this is going out. That might be a doji candle, so there might be some kind of a pullback, but please notice we are still inside of the channel, so uptrend is intact on the euro to the Japanese yen. What is gold doing? And it looks like we are trending higher. We are trending higher because the key zone had been violated. Look at this, that zone between those two levels, 1848, 1865, violated. Now this is the support for the price. This is the support, so we are now trading above the technical support, short-term technical support. It's just been validated. 161% target hit, and now we can remove it. So please notice this candle here. Of course, this is the next target. This candle here looks like a doji, very much. We have a breakout. That's fine. We have a breakout above the zone. We have a breakout above the blue trend line, which is very good for bulls, of course. And as you can see, the RSI is strong. The RSI is positive. Market is overbought. Market is extremely overbought. Next target is, well, 1899, which is basically 1900. But please be aware of the fact that we might have some sort of a pullback. The pullbacks are usually 2.5%. So if we follow this manner, we will, if the 100 and 900 will be hit, we cannot drop below, let's say, below this line, below this level, 1848. That will be 265, which is in range. More likely 1.80 is 165. So both of these levels in the other way, both of these levels cannot be violated, right? We cannot fall back into the channel below the trend line, below the 1848 level, because then of course we have a situation or that we call overbalance, which means this correction is bigger than any of during the uptrend, and that means we might be going lower if that situation happens. 1900 is the next target. Let me just take a look if there is any other target. There you go. The other zone for bulls is 1965, 1990. So that's pretty much it for the gold from the bigger perspective. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.